Good morning, everyone. Hope everyone is well. Welcome to today's Zoom session. So, as usual, I'll do the analysis. Ken did the analysis on Monday, I believe. So, I'm sure he shared with you his trading ideas, what you're seeing in the market, and what he expected. I'm sure he talked a lot about what is happening in the Ukraine and Russia. I wasn't in that meeting, but we talk here a lot. So, we've been discussing a lot and watching videos, just keeping up to speed with what is happening in the war and how it's going to affect a lot of markets. And one of the main things we're looking at is if the sanctions, what are sanctions? If US is to put sanctions on Russia, which is basically if they put a lot of restrictions on them, like not doing trade with them, not buying goods with them, not exporting goods with them, and such stuff, it's going to affect the market and different prices of different commodities that we normally trade. Another thing might be Russia might stop. Remember, Russia is one of the highest or the biggest oil exporting countries in the world, and they export a lot of oil to Europe. And if they are to stop this pipeline that transports oil from Russia to Europe, wait, someone is saying they can't hear me. Rogers, sorry about that. Can anyone else not hear me? I see my sound is totally fine. If you can hear me, anyone else, just tell me you can hear me. Okay, so the rest are saying they can hear. I think Rogers, it's on your end. So yeah. So as I was saying, apologies for that. If oil is to be capped from Russia to travel around the world, remember, simple supply and demand. There'll be little supply and the high demand of oil. So an effect we're able to see in that is that oil in the long term can continue going up as long as the war continues staying. So that's one thing we're looking at on oil. Of course, that doesn't mean it'll just go one steep trend to the upside, ups and downs along the way. But long term, you can see that oil can easily reach $100 a barrel. Right now, I think we're trading at the 90 or something. I don't trade oil myself, but of course, it's the market and I have to watch it. And Ken trades it, so we're watching it and analyzing it together. So that's on oil. Apart from that, there are a lot of other stuff. We're seeing stock markets, different places are down, starting with Moscow stock index. We've seen Moscow, most of their stocks are down. It's a normal thing. Why does that happen? It's because a lot of investors want to sit on cash because of uncertainty, so they take a lot of their money out or their profits out, and as a result, we're seeing the market falling. So it's a normal trajectory that we see in the market. So apart from that, nothing much fundamentally happened. I think next week is when we're going to see a lot. February is about to come to an end, and we're entering into March. March is normally a period of towards the end of the first quarter. So things like indexes, stock markets, it's easy to see a lot of profit being taken because they have to compile their quarterly reports for investors to be seen, and such when they come out, it's easy to see stocks falling quite a bit and correction happening on things like dollar because a lot of people are sitting on cash. But anyway, that's it fundamentally. I don't get deep into that because remember, fundamentals is all opinion based. So what I'm used to and what I know is more of technical analysis. So if I share my screen so that you can see what I'm having, and remember, I like paying attention to the pairs that I normally trade. Okay, so I'll do an analysis of the pairs that I normally look at, and then apart from that, remember, it's normally my own personal view of the market, so I'm not like giving any financial advice, buy here, sell here, just for you guys to understand how you look at the markets. That's why I don't trade. That's why I don't analyze all other markets. So it's just a rough overview. If you understand what I'm doing, then you can easily approach the other markets. So I'll start with Dow Jones. I think this is of significant importance. It's because I have a trade running on this one. So it's best I start with this one so that you can see my thought process behind on this one. Okay. So what am I watching? I'm watching the support levels. Okay. So the support levels, very, very significant. This was my first major support level. Okay. You can see. And how do I identify my support levels? Mainly for me, I look at support levels that push market to new highs. Okay, that's if we were in an uptrend. If we're in a downtrend, I'm looking for resistance levels that are pushing markets to a new low. So for example, this was we had this one. So market was coming high, low. So respecting the Dow theory. So high, low. You can see this low didn't push market to a new high, came and formed a new lower low. Okay, and then this low pushed market to a new high. okay. Then we came back, had another support. This support is what pushed market to a new high, came again, had another push to a new high. So we had what we called, what we've been analyzing with my partners, we're sort of having a 3 push, which market normally pushes to a new high with very minimal significance or minimal momentum to the upside, and a strong break below. Another push to the upside, creates a new high but with little momentum and a push back below. And what did we get after that? We got a very significant push to the downside. So this is a common pattern that can easily be seen in the markets, okay. So currently, what am I watching? Market came and retested both the previous support that took market to a new high and this one previously here, okay. So if you extend it even much lower, you can sort of see that level. So you can see that touch, and also a touch of this one. That's why I'm saying this is a major support level to watch, this one here, okay. Major support level to watch. And also this is another major support to watch if market closes back above it, okay. Remember, for these previous touches, market hasn't been able to close below. We had this first touch, we had over here second, and the third touch did not close below. We had another touch here, market did not close below. But now this week we had a close below this level on the daily chart. Remember, this is the daily chart. Monday market closed below, Tuesday market failed to close, but we're also holding this support level at this level, okay. So what I'm watching above this one, if market is able to break above this support resistance level and close above it, then I'll be looking to see if market can continue rallying to the upside. However, if market stays below this level, continues breaking to the downside and closes below this support level, then these are those trades you don't want to be staying in it, okay. It can be forming a sort of a lower flag formation to the downside. So this is the counter trade that I have to the downside. Market can easily come further lower and get support here. If I go to the 4-hour chart, what am I watching on this one? Because this is where I'm looking for this trade to continue. So I'm looking for possible double touch of this level, double bottom formation, okay. So I'm looking at this first touch. Market came in the respect of a flag formation as well to the upside, if you remember this quite well. Let's put it with the wicks. So we had this respect of this more or less level, okay. So this was a good flag pattern, which market, these are the shorts that we're looking at the other day, which I came out quite early before market actually dropped. However, those are the lessons you learn. But we had this good significant trade. You can see this first touch, market tried to break up above but quickly closed below and continued rallying, okay. As we came to the downside, sort of the opposite has happened. The opposite of this, we sort of had this touch, retest, correction, and a touch over here. Last night I was looking at this significant resistance indication over here, this week over here, rejecting the support level. That's why I'm looking to see if market at least can rally back above to this level, the previous resistance level where market touched before it dropped, okay. So that's what I'm looking at. That's the trade that I have running, okay. Note that I have a very tight stop loss, such that if market starts breaking below this level and moving to the downside, then you don't want to be hoping on this level. This market can strongly fall, especially with the tensions happening in Ukraine and a lot of investors sitting on cash worldwide, not just in Ukraine and Moscow, which is Russia. Also around the world, most people can be sitting on cash. But I'm trying to think a bit opposite, okay. Not everyone will act the same. Some people, according to me, it might not be as significant as most people expect, and therefore can have a very quick correction and market to continue with the upward trend very soon, okay. So that's what I'm watching on this one. Another thing to note, however, not only the war, but also interest rates. Note, next month markets, there's a high potential that the Feds are going to increase interest rates from ultimate lows that we've been seeing. So also that can be an indication. And what happens when interest rates are increased is that most people want to sit on cash because borrowing now becomes more expensive, okay, and that can result into Dow Jones falling and the dollar rising. So those are the things you need to be able to piece this together, okay. That's why I'm telling you, I'm very quick. If this market starts falling and I become wrong, I'm very quick to come out of that trade and look for more shorts to the downside, like I was looking for the short that I got on this trade, okay. So that's what I have on US30. Let me not spend too much time there. Let's go on to gold before I come to the currencies. Gold, what I'm looking at, if I go to the daily chart, remember we were in a triangular formation that market broke, okay. I want this on the lower time frame. So we had this. So this was a good pattern, a triangular formation, which we had a sort of same exact one on Aussie dollar, but on the lower time frame. So we had this breakout retest of support level, quick rally, up above this 1870 significant level to touch the 1912, okay, 1912.5 significant level, which was a previous resistance. Okay, so I'm always paying attention to previous resistance. For example, like you see this resistance that pushed market lower, we had a strong break above. So a break above indicates that market can continue moving above. But now we've come to this previous one. Okay, now we want to look at the market pattern that's forming, and if you try and look closer, we're sort of seeing the same pattern that formed here. You're seeing here, this pattern that formed here, sort of what we're starting to see market forming here. So a very significant indication that market can get a short-term pullback. I don't indicate to say that market can go all the way down, but I can see market going back to retest the 1870. And if you go to the 4-hour chart, because it supports this pattern like formation, is that one, I have this channel like formation. Okay, so you can see this significant push to the upside, correction to the downside. We've had this first touch, second touch, third touch, pushed market to a new high to come back to this level. Okay, and this level, what am I watching? I'm watching, and I keep saying this a lot, as we approach a significant level, the main question to ask yourself is, how are we approaching it? Are we approaching it with momentum, or are we approaching it with reduced momentum? If we're approaching it with momentum, it's simple. Market can easily break and continue that momentum to the upside. However, if we're approaching it with reduced momentum, and reduced momentum can easily be seen from the chart, from the price action, that basically is move up, correction, move up, correction, move up, correction. In this case, we're seeing more or less a consolidation. This can easily be an indication that market is able to respect this level and correct to the downside. Okay, so that's what I'm watching on gold. This is a significant, and if you go to the 1-hour chart, it's even much more clear. Okay, much more clear. We're sort of also getting sort of a breakout, but if you adjust this line properly, it's not yet there yet. Okay, but if you look at it, you're looking at that touch, correction, touch, correction, touch. We can have another third bounce here, maybe one more push to the upside to respect the 1925, which is the significant level I'm watching, before we see an exhaustive, or rather a strong correction to the downside. So that's what I'm watching on gold. Gold. I'm looking for a correction short term, and then we can have long-term longs to continue with that trend to the upside, especially with a lot of uncertainties and happening around the world. Okay, with the war and all that, gold can act as a very good hedge for this pair to continue rising to the upside. So that's what I have on gold. Aussie dollar is interesting. If you look at the daily chart, we're breaking a significant level which was closed yesterday. Okay, so remember, as I keep saying, you need to do a lot of homework and pay attention to the details that the market is giving you. So we've been having this consolidation that market has been unable to break for the past couple of days. Okay, more or less over here. I think it's better if I go to the 4-hour chart. It's much more clear for you to see. So here on the 4-hour chart, we've been having this sort of, so market is in like a channel like formation, just like what we're seeing on gold. The market has been respecting the downside, first touch, second touch, and also the upside, first touch, second touch. And we have this resistance level at the 0.7220 level. You can see this touch, strong rejection. Market came and consolidated around this level. But yesterday we saw, I think this was yesterday morning actually, we're seeing a close above this level and market starting to rally. And I can support this level for market to move further up, because on the 1-hour chart, what I was saying, we had a triangular formation which was broken quite easily. So you can see this. Remember, anytime market is consolidating, that these questions, fundamental questions you should ask yourself. Okay, market is consolidating. What is the pattern behind this consolidation? Is it a pattern I'm familiar with? If it is, prepare to trade it. If it's not, then stay out of that market. This was a triangular formation. You can see we had a first touch, second touch, third touch. This propelled market to the upside. We had a breakout, a quick retest, and market has continued rallying. Okay, so I can easily see this level being tapped, the 0.7280 level around here, which is about 40 pips away from where we currently are, which market can easily rally to that level. So that's what I'm watching, in line with this channel like formation. Okay, so that's what I'm watching on Aussie dollar. Nothing much on this one. Okay, if I go to my last pair, which I'll end with, USD CAD. If you're a USD CAD trader, man, this pair has been consolidating for the past almost 2 weeks now, even more or less. Okay, and if I zoom in, what I'm watching on this one here on the daily chart, market has been, it sort of looks like a triangular formation, but on the 4-hour chart, it's more or less a flag formation. Okay, remember, market we broke above this level, the 1.2620 level, resistance support level. Okay, then there's a resistance level above here, the 1.2835 level. Okay, but in between, market has been in this consolidation, and we're sort of respecting it. I haven't been trading this ever since we got into this consolidation. I'm waiting for a significant entry level, but there's no pattern here that I trade. However, if market is able to drop to the 1.2620 level, then I'll be very, very eager to be buying this market to push it to the upside, to come back to the 1.2835 level. Okay, so this one has been quite choppy. If you've been trying to trade this one, buying, selling, you've had a hard time doing that because market hasn't really created new highs, neither has it created new lows for the past almost 2 weeks. So that's something significant that I'm paying attention to. So I don't have anything much on this one. And that's what I'm watching for these pairs. So that's mainly what I trade. If you look at the DXY, what are we seeing there? Overall on the dollar strength, if I go to the 4-hour chart, if I start with the daily, so yeah, so market is more or less consolidating within these levels. Remember, long term this market has been moving to the higher side, so we haven't broken the trend to the upside. Market has still been creating higher highs and higher lows. Okay, we created the last high here, which has had a very quick correction. However, this correction did not go to a new lower low, so the market is still in an uptrend. You can still continue trading in that direction on this one, especially now that the dollar is can also act as a safe haven for the war that is happening. And also, if we're able to get those interest rate hikes, the dollar can see a very good rally to the upside. But in the meantime, that's what I'm watching. You can see I have my support resistance level, which I'm watching currently to see how market will respect it. We had a flag formation, very good drop. We can see further drops, maybe further lower to the 95.6 before any significant pattern happens. But apart from that, let me not go too deep into what I don't trade and what I don't analyze. That's what I normally look at. That's how I approach the market, and that's how simple, keep it less, very few pairs, very few chart patterns that I'm trading. That allows me to be able to do other things during the rest of the day. And I'm also a swing trader, so I can hold trades for about 3-4 days, even 2 weeks, 3 weeks. And at the same time, if you can hold a trade for that long, I can also wait that long before I get a trade set up. So those are the few things that I pay attention to. But anyway, that's it from my end, guys. Thanks for tuning in. I hope you've enjoyed that. Hope it helped. And I'll end it there for today, and I'll upload this video on YouTube. So if you want to rewatch it, it'll be there later on in the day. So that's it from me, and I'll see you guys soon on Friday. So peace.